What I watch all the time is the money supply expanding or contracting, and where is it doing so? Because it's telling you where the investor is pulling their money from.
If you watch this channel, you've heard it over and over. You'll keep hearing it, in fact. The supply and demand economics that are coded into the Bitcoin halving is what makes the price of Bitcoin go to the moon every 4 years. What if I told you there might be more to it than just this? Watch this video until the very end to quantum leap your crypto and financial IQ into the age of knowing. Let's get it. I'm not a financial advisor. Welcome to BitBoy X. I'm your host, the BitBoy. If you want to elevate your understanding of how the crypto market works and change the future for you and your family, make sure to smash the like button, subscribe to the channel, and hit the notification bell for more. When I was a child, I thought like a child. But now, I put aside my naive ways, come to realize that there's more going on behind the scenes of crypto than most people could imagine. Once I saw it, I couldn't unsee it. To be clear, sticking to the 4-year cycle is what propelled me to the top of the crypto space in 2021. And we're gonna do it all over again. It's still just as important as it was then. But what if I told you that 2 other signals are flashing right now that drive a parabolic bull run in crypto every single time? Before we get there, you have to understand something about the nature of this market. I'm talking about the sudden bullish news that just seems to fall like a row of dominoes in just the right way every time. In the 2017 bull run, Bitcoin futures contracts, the Bitcoin Cash hard fork, and the ICO craze were injecting bullish sentiment into the market. Ethereum and Litecoin were added to Coinbase, and that opened the floodgate for altcoins. In late 2020, PayPal added support for Bitcoin, and something began bubbling under the surface of the crypto market sentiment. Then, in early 2021, MicroStrategy and Jack Dorsey's Block, which was still Square at the time, began gobbling up Bitcoin off the market. Then came the announcement that Tesla was buying Bitcoin, and boom, an explosive trigger was pulled that couldn't be undone. Later in the year, Coinbase would IPO. Coinbase would then briefly become the #1 app on the App Store, and Bitcoin would become legal tender in El Salvador. Now, these were all used in different ways, of course. But how do these stories just seem to come at just the right time, every time? I suppose it makes sense that these stories break when they do because these actions are taken in response to a compounding spike in demand after the halving. But there's another signal that does not react to the halving at all, but it happens every time we get a bull run in crypto. I'm talking about the United States presidential election. In fact, no matter the winning party, every election year since 2012 has seen a green quarter four for Bitcoin, followed by a parabolic bull run the next year. 2 of these 3 elections were actually won by Democrats, the best people with money. The last 2 election years saw a green October, November, and December. Is it possible it's just a coincidence? The election lines up with the Bitcoin 4-year cycle? Sure, but it's possible in the way that it's possible to be dealt a royal flush 3 times in a row. The more coincidences that are at play, the question becomes, who shuffled the deck? Which leads to the next point, global M2 money supply. Check out this fascinating clip that explains how Bitcoin is the most correlated asset in the world with global liquidity.
Bitcoin is the world's best proxy for global liquidity. It moves with global money supply 83% of the time over any 12-month period, making it the highest correlated asset out of any major macro asset class with global liquidity. So this is all from a report from Sam Callahan at Sam Calla on Twitter, Bitcoin analyst and author of the news block. And the first chart that he created was a chart of the S&P 500 and global M2 money supply. You can see that both of these move linearly, roughly in line with one another. As global money supply expands over this last decade, so too has the S&P 500 expanded in linear fashion. But as global M2 has expanded in linear fashion over the last decade, Bitcoin has expanded exponentially in its price. You could see that Bitcoin is mapped in log scale, global M2 is mapped in linear scale. And this has resulted in Bitcoin being the tightest correlated macro asset to global M2 on just a simple raw correlation over any rolling 12-month period from the last decade. It is a correlation of 0.51 compared to gold at 0.5 and the S&P 500 at 0.45. And if we take a look at this chart here, if we map the year-over-year change in global M2 with the year-over-year change in Bitcoin's price, Bitcoin clearly has a strong correlation with global liquidity. You can see it here. They ebb and flow with one another. Bitcoin rises when global liquidity increases, and it falls when global liquidity decreases. This makes it a liquidity barometer, or the world's best hedge against money supply inflation, if you think that it's going to go up in perpetuity, which historical precedent suggests that it continues to do so. Therefore, it will, cycle after cycle.
Now, at this point, it would be helpful to define what global M2 money supply is. It's basically a broad measurement of the total amount of liquid money in circulation in the world. It includes cash in any kind of liquid deposit account. It acts as a key indicator of global monetary policies and economic conditions. To think that Bitcoin moves in step with global liquidity 83% of the time is staggering. Well, what increases global liquidity, you may ask? One important answer is quantitative easing, or in layman's terms, the money printer. In 2020, money was printed in response to COVID, and now global liquidity is on the rise in the aftermath of a tightened monetary policy that was combating inflation. So where do we sit right now? And what does it mean for the bull run? Well, over $4 trillion has been added to the global M2 money supply since mid-June, going from just under 104 trillion to 108 trillion. This 4 trillion is almost double the total crypto market cap added to global liquidity in just a few months. The kicker is that for many nations, we are just barely entering into a cycle of softened monetary policy, signaling that there is more growth in global liquidity to come.
The world is entering a phase of quantitative easing. We started our interest slashes. Our last interest slash, the last FOMC meeting, was the first Fed pivot since March of 2020. Not to mention China, Japan, other countries in Europe. The M2 money supply is curving up and to the right. And what George was saying is that if you look historically, what he started off by saying, you know, history doesn't repeat itself, but it often rhymes. And when we print money, when the world prints money, when the M2 money supply goes up, so does Bitcoin. So kind of regardless of the election, because of the increase in money supply, we should front run the election regardless.
So the halving just so happens to come just before the US presidential elections and cycle over cycle of global liquidity growth. Coincidence? Or who's pulling the strings? Who do you think? I think I know who it is. Drop your comments down below. Don't forget to smash that like button and subscribe to the channel, because the Bit Squad is the highest IQ community in all of crypto. That's all I've got. Be blessed. Bitboy out.